Hi, welcome back for another installment of 52 and 52, in which I'm interviewing 52 Wisconsin professionals and sharing their ideas with my clients and prospective clients throughout Wisconsin. This is actually part 2 of my interview with Ken Reish, the owner of R&R Insurance. In the last YouTube video, Ken gave a very nice description of what R&R is capable of offering our clients. And in this one, I actually have some more specific questions for him. One of the things that has been coming up is the changing landscape of agencies and brokers and acquisitions. You mentioned in part 1 that we started out by purchasing a very small agency, and I know it probably has cycles in which these things happen, but most recently Security Insurance was purchased by Marsh, and even going back further than that, we've seen Frank Hack get purchased by HRH and then Willis, and I continue to see almost on a monthly basis
hundreds of agencies around the country.
Right.
Good sized agencies.
Acquisitions are being made constantly, and I'm curious, what does that really mean for the buyers of insurance in Wisconsin? And is it good or bad? What is your take on these acquisitions and brokers versus agencies and things like that?
Yeah. Let me talk about it in a couple parts.
Okay.
Good and bad's kind of hard to define. The reason that you're seeing a lot of this is what we call the alphabet houses, the Willises, the Marsh Macks, the Aon people. They have to have growth. They have to sustain growth. Their stock is traded on the New York Stock Exchange. They report to different people. They need to absolutely grow those companies in order for the companies to pay dividends to their stockholders. So if you've looked at the economy the last 4 years, 2008, really through 2011, even into a significant amount of 2012, the economy hasn't had tremendous growth. Revenues are quite often generated based on exposures of customers. As exposures go down, premiums generally go down. Exposures mean sales, payrolls, building values, shrinking inventories. The premiums for those accounts go down. That doesn't only happen with small businesses. That happens with huge businesses, which are typically the ones where the alphabet houses have played in. So their strategy is to really reach out to an organization, an agency like Security, RJF up in Eau Claire, Minneapolis, where you have an older producer organization. You have owners that have to somehow get money out of their organization to retire, and baby boomers that are coming to the end of their careers. So on the alphabet side of the house, that's a very, very attractive group of people to buy, because what they want those books of business. And with the economy maybe surging a little bit in 2012, hopefully in 2013, those become pretty good investments. At the same time, for those baby boomers, those people my age that are still managing those agencies, they have to compete because the compression of the marketplace has forced their accounts to be smaller, and yet they have to service some of the accounts that the alphabet houses were servicing writing before. They're coming down in that premium threshold. And then you talk about the services that these baby boomer agencies, the Securities, the R&R Insurances, we have to invest, I would say, lots of money. I could tell you dollars amounts, but it's significant money in time, people, and resource to bring the services that we really feel is important to bring to our customers, hopefully our prospects, and then also to support the carriers that we have had contracts with for long periods of time. So it's a little bit of the shrinking premium dollar around the country, even the world, that has kind of forced this acquisition speed-up process. Hundreds of agencies, smaller than R&R and larger than R&R Insurance, have been acquired throughout the country. And it is a strategy that the alphabet houses are trying to work. It's happened many times over the course of my 40 years in business. I think for an R&R Insurance, it brings us tremendous opportunity. The biggest reason for the opportunity, the good for us, and I think the good for our customers is we have all of our decisions being made locally here.
Right.
It's not a decision being made out of Chicago or New York. The buck, so to speak, stops at my desk. And the carriers love doing business with us because the buck stops at R&R Insurance. A branch president for a CNA, Zurich, Travelers, West Bend Mutual, Acuity, whatever the company might be, they're not having to deal with people outside of their local influential area. We are local, owned locally, not for sale, and done business on a local basis since December of 1975. That's the upside for us. Wisconsin people like to do business with Wisconsin people.
From a servicing standpoint, I mean, I came through this with Wausau Insurance, where
Sure.
the Wausau Direct side was purchased by Arthur J. Gallagher.
Right?
And I've seen some of those friends of mine that were producers at Wausau Direct go to Gallagher and have ultimately decided to leave to go to different agencies and work. And I know some of the reasons why they did that. What happens in your experience when a larger broker comes in, makes an acquisition, things seem to stay the same for a year or two, and then I start to see where they have they almost set a premium threshold for service.
Yeah.
I see that with the banking industry too, where a large bank makes an acquisition and then they start doing things differently than the local bank. Any thoughts on that?
Well, historically, what happens is acquisitions are made. People come in, they say that the agency is going to continue to operate the way it does. And maybe for a point in time it does, but there are environmentals around any business, any industry, that we in that industry don't control. For instance, in the property casualty arena, we do not control investment income.
Right.
If you look at the investment income that insurance companies make today versus the investment income they made in 2004, 2003, 2002, it pales in comparison to the 90s and the early 2000s. And a large organization can't control that investment income. That's going to make an agency more profitable or less profitable. The market conditions. When premium is driven down, when it's a soft market, when it's a buyer's market, that generally happens when investment income isn't very good. The rates get driven down.
Mm-hmm.
What causes a hard market is those rates start to have to be brought back into place. Those are environmentals that the distribution system, the alphabet houses, agencies like ours, smaller agencies, direct writers, the Allstates, State Farms, we do not control that. Those are environmentals that we can't control. But those intangibles, those environmentals, cause us tremendous economic upside and downside. And so over time, I suspect with the Marsh Mac buying local agencies, it may go real well for a couple, 3 years. But ultimately, if that group isn't making money, if they can't fit into the formula, the mold, the cash flow, whatever the case Marsh Mac may be looking for in that investment, Marsh Mac's going to change the structure of that investment. Today, they would say it's going to stay the same.
Right.
I've been doing this, again, since 1975, and things have things change. Very little stands still in the business world.
Well, you touched on a little bit of the market, in the hard market and the soft market, and that actually is going to take us into segment 3 with Ken Reich, owner of R&R Insurance. We're going to talk about what customers are going to face just around the corner here come January 2013, when 50% of business insurance policies renew. I'm going to ask Ken because he speaks with, as he mentioned earlier, all of the carrier heads, and I want to know why my customers' premiums are going up, and I have to have these discussions that are actually pretty uncomfortable for me. So we'll stop here. This link will be available, and the next link on YouTube will be available, part 3 of my discussion with Ken Reich. Thank you for joining us.